Hey, my name is Evan. Um, I've gotten really bullish on Ethereum lately, and I believe the best way to expose yourself to the Ethereum network is through digital asset treasury strategies, specifically BitMine. And each day goes by, and I become more and more bullish on it. So I figured I'd make a YouTube video about it. Um, this is an investment advice. I'm not a financial advisor. People are always subject to making their own decisions. Here are the content. So before I get into why I think BitMine is the best way to expose yourself to Ethereum and why I'm bullish on Ethereum to begin with, I think it's important to understand Ethereum. So a lot of people have this idea in their head for cryptocurrencies that it's some sort of medium of exchange. I think they attach themselves to the word currency and they create a medium of exchange idea. And really, that's not the case at all. The US dollar will always be the king when it comes to a medium of exchange. People like to envision a world where people will be transacting and exchanging in Bitcoin, or in this case, transacting and exchanging in Ether. That will really never happen, and the US dollar will probably be the king for a very long time. This is a very deep misunderstanding when it comes to cryptocurrencies, and I think a lot of retail investors and traditional finance guys hold this misunderstanding. A better way to understand it is as a digital network and as a settlement layer. So, what do I mean by that? A digital network is really hard to envision or really hard to picture, but it's a peer to peer open source network where people can transact and people can settle transactions on the network. And the Ethereum network made a lot of big innovations when it comes to the predecessor, which is Bitcoin, which was the first cryptocurrency. Some of the innovations include smart contracts, so you can create contractual obligations on the network, or staking yield, so you can make a 4 to 5% yield. You can look at this as a dividend and a GAAP approved net income that you can make just from holding the asset. Um, in a lot of ways, you can speed up transactions on the Ethereum network. The Ethereum network is better programmable, so it's a really good settlement layer. And if you can understand the Ethereum network not as a medium of exchange, but as a settlement layer, you should be able to understand that its native currency, Ether, is a commodity. And a good mental model for understanding it as a commodity is digital oil. So, a good use case or a good case study when it comes to understanding the Ethereum network is stablecoins. The idea of stablecoins is if you live in a country like Iraq, Argentina, Brazil, places that experience currency collapse or currency instability, you want access to currency stability because it makes for easier trade. The big winner here is the US dollar. So what do? You go to Western Union where they take 7% off the top, or do you go to a bank where you probably don't even have access to? It's a big problem, and stablecoins offers a really smart solution. So the idea is, a stablecoin issuer such as Circle, which has been the hottest stock of the year on the public market, or Tether, which is the second most valuable bank in the entire world, more valuable than Citi, more valuable than Wells Fargo, only second to JP Morgan. I want people to understand that the second most valuable bank in the entire world is a stablecoin issuer known as Tether. They created the idea where, okay, we'll just buy US treasuries, we'll just buy US dollars, hold custodianship of them, and then issue out tokens that have a one-to-one connection, a one-to-one relationship with the US dollar. So the real winner here is the stablecoin issuer, of course, but also the US treasuries. Secretary of Treasury Scott Bessent thinks the stablecoin market will 10x within the next decade. And they're a big winner here because now they have constant demand for the US Treasuries. The 12th largest buyer of US Treasuries today was Tether. So it's really important to understand that the Treasury Department is pro stablecoins as well. This is really important in a time where we're seeing some de-dollarization. Some people are moving to gold or Bitcoin rather than holding US Treasuries. So The US Treasury Department is very, very pro stablecoin, and the primary settlement layer they're using is Ethereum. If you look at this green line, it's kind of hard to see. The primary settlement layer they're using is the Ethereum network. And this goes far beyond just US stablecoins. We're seeing a rise in gold being tokenized on the Ethereum network. If you look at the chart on the left-hand side, after 2025, it's almost a vertical line of tokenization of gold on the Ethereum network. That's a huge use case as well. Equity, stocks. If you are a European investor or Latin American investor, you want access to US stocks because, hottest stocks in the entire world, most innovative companies in the entire world. It's really difficult. So Robinhood created the idea, okay, we're just going to own US stocks and we're just going to have custodianship of them. And we are going to issue one-to-one tokens that has a one-to-one correlation with the underlying asset. They've done this with over 400 US stocks, and they've done this with 2 private stocks as well, OpenAI and SpaceX. So if you can envision a world where the US dollar is being tokenized, where gold is being tokenized, where equity is being tokenized, you can envision a world where literally everything will be tokenized. Don't take my word for it. Look at some of the investors, some of the investment titans of this world. Peter Thiel, early investor in Facebook, largest venture, or probably best venture capital firm in the entire world, has made a big splash with Ethereum this year. Stan Druckenmiller, longtime partner of George Soros, big splash with Ethereum. Tom Lee, biggest or best performing actively managed ETF within the US, big splash. Kathy Wood, early investor in Tesla and Nvidia. Larry Fink believes every asset on the financial market will be tokenized. And the CEO of Robinhood has said tokenization will eat the entire global financial system as we know it. And this year, we've seen a lot of regulatory guidance when it comes to crypto. The first one was the Genius Act that passed this year with bipartisan support, which really set the stage for stablecoin guidance when it comes for accounting and so on and so forth. Really big bill that got passed. The Clarity Act, which is making its way through Congress right now, creates a clear distinction between when a cryptocurrency is a security and when it's a commodity. It's another big step. The SEC's Project Crypto, where they're trying to have the entire financial world on the blockchain. It's another big step. And the White House, Donald Trump's son is entirely crypto pilled, runs a Bitcoin company, and I believe Donald Trump will always look out for his kids. JD Vance, big investor or big fundraiser in his Senate race. Peter Thiel, big donator to his vice presidential and Donald Trump's presidential campaign. Peter Thiel. In a lot of ways, Peter Thiel has the ear of JD Vance. Peter Thiel is very influential in this administration. In a lot of ways, in my opinion, I believe that he made JD Vance's entire political career. So in order to understand the day-to-day happenings of the White House, you need to understand JD Vance and you need to understand his relationship with Peter Thiel. And if you can accept that the Ethereum network is going to be a big winner over the next decade or two, then you can accept that you want to expose yourself to the commodity Ether, right? So what's the best way to do this? Warren Buffett had an interesting comment on gold, which is a commodity, which, if you own 1 ounce of gold, it's going to be an ounce of gold a decade from now, 2 decades from now, an eternity from now. That's the real issue with the commodity is there's no accumulation, there's no acceleration of owning the underlying commodity, but the digital asset treasury strategy has really solved that. And the idea is if you exist on the equity market at a premium, you can issue equity shares at that premium and then buy the underlying asset at a discount. So it's actually accumulative. You are increasing the commodity per share. In this case, you're increasing the ETH per share. And why does it exist at a premium to its net asset value? It's a really good question. The first reason is that it's an equity wrapper. So if you are an institutional investor where you're bounded by only investing in US equities, or you're bounded by not investing in alternatives, it's hard to get access to it. So if you have a digital asset treasury company that exists on the US equity market, it acts as a wrapper to the underlying asset. So it exists at a premium for that reason. Another reason is liquidity. Right now, BitMine, which is the largest digital asset treasury company, Forward Ether, trades with the same liquidity as American Airlines, similar liquidity to Pfizer, almost the same liquidity as Snap. So you're not jailed in. In a lot of ways, BitMine has been the digital asset treasury company of choice by Wall Street. It's another reason it exists at a premium. And for the losers of the digital asset treasury company strategy, where they're trading below their net asset value, BitMine just buys them up. They just acquire them. It's a really, really, really smart play. So it exists at a premium for that reason. I as an individual cannot conduct an acquisition, but BitMine as a company can. And the fourth reason is project funding. I believe in the future, BitMine will fund crypto projects its own and in a lot of ways become a kingmaker for the Ethereum network. And on the left-hand side, I have a chart. I'm not a big technical analysis guy, but we can see that sellers are drying up and buyers are remaining consistent. So this as buyers continue to purchase the stock, I believe sellers will dry up and the price could explode if Ethereum moves in lockstep with the chart. But this chart is really bullish, honestly. And so a lot of people ask me for price predictions with ETH or price predictions with BitMine or time horizons with either the two assets. And I think that's really unfair because a lot of people like to hold you to your price targets or your time horizons as, a way to like kind of hostage you into your own words. And I think that's unfair and unreasonable. And I think people who think that way are they're either trying to create, entrap you into your own words, or they're just stupid. So I'm not going to give a price target. I'm not going to give a time horizon either. But thank you. And again, this is not investment advice.